Let's talk a little bit about getting your business funded and the reality of that, what to expect, what your chances are, and maybe how to go about doing it. So, the no pun intended here, $1 million question is, how am I going to pay for all this? So, there's a lot of things that you need to understand when it comes to funding your business. And you've got a couple, well, not a couple, I mean, you have a lot of different options, some way, way, way better than others. So, hopefully, you have enough money to do it yourself. I've worked hard and been able to fund my own businesses, but I've also gone through the dog and pony show of talking to investors and venture capitalists. I've been in the Shark Tank. I'm going to give you a little insight on that in a minute. So let's first talk about a couple other things. I've had people say, well, I'm going to go down to the bank and get a loan to start my business. No, you're not. Banks don't give loans to new businesses. You know why? Because 4 out of 5 new businesses die in the first 2 years, if not sooner. So banks are in the business of making good bets, and a new business is not a good bet. So if you're going to go to the bank and get a loan, even as an established business, they're pretty much going to want you to have 10 times assets for every dollar that they'll loan you. They might go a little deeper than that if you're really established or you have other assets. But overall, you're not getting money from the bank to start your new business. You've got some other options. You can look into things like the SBA, the Small Business Administration. That's a government-funded entity. They exist to try to help stimulate commerce and help people start businesses. It's a long process. It's a lot of paperwork. It's not going to go fast. They're going to want you to have something, and there's a lot of people applying. So if you go that route, you need to have it all together, and you need to do a good job, and you need to take it seriously, because if you half-ass that application, forget about it. Okay. A lot of people turn to family and friends. These are oftentimes referred to as angel investors. However, in my world, the term angel investor means something different. Now, if you're just starting a small business and you are turning to friends and family, that is your angel network. Those are the people that are, close to you and likely to buy into you. Now, that being said, I want to strongly caution you when it comes to taking your friends and family's money. First off, if you lose it, you're going to have a lot of problems. You're going to have a lot of people that you see a lot, that you love, that you care about, that are now wondering, where's my money? So, heed caution and tread lightly when it comes to that. Now, that being said, it's probably the most common way that, small businesses get up and running. Some people take a riskier route, and they'll do things like fund their business through their own personal credit cards. Been there, done it, built a huge business and several other businesses, all from leveraged debt. So just be very careful when you do that, because getting on the wrong side of it is expensive, and you might pay for it for the rest of your life. And I'm not kidding about that. Like, literally, you might put yourself on a 30-year payment plan. So now that's accessible, and it's there in front of you. You can't make your payroll with the credit card, or at least you're not supposed to. But overall, that's how some people get a little jump start. I'm not going to tell you not to do it, because I've done it. And then you're going to also have, now we're going to move on to the more sophisticated, that sounded so fancy, didn't it? Version of funding your business and raising capital. Now, when you watch the movies, you get some guys that start a business and it takes off, and there's just venture capitalists and investors just lined up all day. There's just so many. It's not even what are we going to take money, it's who are we going to take it from. That happens about 1 out of every, I don't even know the number, but it's high. It's like in the millions. It's not going to happen to you. If it does, awesome. Call me because I want to come work with you or for you, because you're clearly doing something that the rest of us aren't. Now, that being said, you're going to have different classifications of investors. And we're going to go back to this term angel investor. In the world that I feel a little more comfortable using the word angel investor, this means an accredited investor. And in order to be an accredited investor, right now in 2017, you would have had to have made over $200,000 a year for the last 2 years and have, I think it's over $1 million in liquid assets, none of which are comprised of the value of your home compared to what you owe. So that being said, these angel investors or accredited investors are allowed a little more leeway. I have some opinions that I'm not going to get into about why that's the case, but I think they just kind of assume that if you were smart or savvy enough to gain that kind of asset value or to earn that kind of money a couple years in a row, that you're smart enough not to just fall for something crazy. And that's really part of the accreditation process, which, by the way, is just you qualify or you don't. Some states might want you to send in info, like I'm an accredited angel investor in the state of Kansas, which offers some tax breaks for these reasons. And it took me a few minutes and $50. So that being said, an accredited investor is allowed to basically buy stock in your company without your company being required to have fulfilled all of the necessary standards and practices and requirements of the Securities and Exchange Commission. So if you are dealing with accredited investors, they're likely to have net worth that they can make a more substantial investment in your company. So there you go. Now you always hear the term VC or venture capitalist. Maybe vulture capitalist is a better term. Now, these are people that are in no other business other than profit. And I'm not saying that I have a problem with VCs. I haven't done business with any of them yet. I've met with several, but it's, first off, you're going to start applying to these things, and you need to understand that these people just get bombarded with applications. So if you even get a call back, you've done all right. And if you get a meeting, you've done even better. When you go to that meeting, you need to be ready to be as direct and to the point as quickly and efficiently as you can. And you need to be able to do things like, they don't care about the features of your product. They care about the benefit that the buyers find in it. They care about the unique nature of it. And they care about whether or not they have the ability to make a really big return on their investment in a somewhat short amount of time. A venture capitalist does not want to hear about how you want to own and operate the company for the next 25 years. They want to hear about how they can put a whole bunch of money in and help you blow that balloon up until it's one breath away from popping, and then you sell it all. That's how it goes. That's how the VCs go. So now then on top of that, these people see tons and tons and tons of deals. It doesn't mean that they're familiar with your segment of business or your part of industry. So you need to, if you're going to get funded by a venture capital firm, you need to either be pretty unique and a leader in your field, or you need to already be kind of profitable. And here's that damned if you do, damned if you don't. You're going to run at half these firms. They want and need you to be profitable enough that you really don't even need their money. Yeah, I know. Yeah. So you're going to have different stages of financing and funding your business. They're going to really kind of go as follows. You're going to first start with seed funding, which is oftentimes the few bucks that you scrape together or put on your credit card to get, your concept or business rolling in the right direction. You might hit an angel round after that, which is maybe more friends and family or other accredited investors. And then you're going to run into terms and rounds like Series A and Series B. These are the funding rounds that typically follow up the early stage rounds. Now, as these rounds move on, you're going to find yourself, if you're doing something right, your company's getting more valuable along the way. And your goal is to, keep that process moving. And, at this current state of my existence, I'm currently only really interested in, if I'm going to participate in any new businesses or enterprises, I'm really only interested in things that that are going to get funded, are already funded, and so on. And the reason why is, I spent a lot of time over the last several years, funding my own stuff. I'm tired of it. There's people that'll give you money to let you do it on their dime. And, that being said, do that because you sleep better at night. Now, you're going to have to work just as hard, but, so anyway. But basically, when you get into your Series A and Series B rounds, your company's already really kind of blown up and expanded at that point. They're at those points of funding, now they're just seeking for hyper growth. And we're talking about business models and processes that are already clearly efficient and moving forward. Or it might, depending on what kind of business you're in, it might, maybe you need a facility or you need something that you just don't have the capital to, gain on your own. Now, there's some other reasons. It's really feels kind of weird sometimes, but it's almost like a lot of the companies and people and entrepreneurs that I've been around over the last couple of years seem more enamored with how much money a company was able to raise or how much a founder or entrepreneur was able to raise. They seem sometimes more interested and excited about that than they do about the actual success of the company. So, it is what it is. It's a very strange world when it comes to capital financing and funding of a business. I look at companies like Snapchat, which doesn't have any revenue, or maybe they do, but it's shit. And you have people pouring hundreds and hundreds of millions of dollars into an app that makes me look like a cat. And I gotta just wonder, why? So there's a lot of stuff that gets funded for really weird reasons. There's a lot of stuff that should get funded that doesn't. Gotta know that it's a long, hard, frustrating road. If you're not ready to submit hundreds and hundreds of applications, to hear the word no a lot, to get told, and then here's the thing too, if they're interested in you, then they're going to start telling you why they're not. They're going to start trying to tear your product down. It's got all these holes in it and this and that. That's the way these guys are going to negotiate with you. They're going to try to devalue you, and that's still there until they've signed on the contract. It's still their job to get the most from you for the least. So remember, it's a battlefield until the paperwork is signed, and they're going to beat the crap out of you and tell you why you're kind of worthless, and then want to sign documents and then go out for a steak afterward and be your best friend. So be prepared for it. It's a really weird world. If you can find a way to avoid it, good for you. If you're trying to do something really, really big, you're going to probably find that you're going to need their money. So saddle up. See ya.